Forget the fact that their inflation worldwide is probably at stages that I don't think anyone has ever seen. Some countries are 10% inflation rates, 12% inflation rates monthly. So the Federal Reserve basically is weakening the dollar coming into October. That causes the British pound to, by very nature, make another run up here to $2.10. And then we get more bad housing types of data coming out of Great Britain. Boom, market comes down again. Notice that the rally here, this overall flag pattern which formed coming down was ended coming into, once again, the housing numbers coming out from the pound, and now they're starting to go down. So I think we've got a couple of things going on here. Let's go back up to a daily bar, and you can see that really the dollar's just at an all-time, weak level against all currencies. So I think what we're faced with here is that the dollar in general is getting stronger just because it's been under pressure for so long. I mean, for crying out loud, when you start seeing Newsweek, Forbes, Fortune, all of these business magazines talking about the weakness of the dollar, the odds are that you're going to get the dollar strengthening for a time. I don't anticipate it's going to be long-lasting, but I do believe that the dollar will gain some strength. Let's go ahead and take a look at the euro here. You can see here all-time high pushing up near to $1.50. That's has since relaxed. There's not much support over here for the euro. I mean, this thing, after it moved up off of this trading lane, the euro really started to take off. Let's go ahead and I'll lay a, whoops. So you see there's the top end of the trading lane. You can see the euro really would have to come all the way back down to about 41.15 to get back to this growth angle, if you want to call it that. Let me go ahead and run. We've got a couple of different angled lines here. This is where things got pretty sloppy. You can see there the euro was trading along this very aggressive trading lane. It broke out of that and then I think settled down into something that was a bit more realistic, if you will. Settled back down into this type of trading lane here. So you can see that this angle actually for the euro works well in spite of several points where it manages to go out. You can see that this is a very well-developed trading lane for 2006 and most of 2007. And you can see, look at this. I mean, the angle is just really, really steep there, folks. And anytime a market moves up along a steep line like that, you'll tend to get it coming back down to, more of a 45-degree angle here. So something that looks more like that. So again, I put the target here right in line with this upward sloping angle right into the 4300 lane, maybe 4160 level. Basically, the U.S. dollar just getting stronger over the next several probably months, maybe into middle of quarter one, end of quarter two at the longest. Please don't think I'm trying to prognosticate here. That's just a guess. But bottom line is I really think the U.S. dollar is coming into some strength here, so we've got to be prepared for that. What that means is we can naturally expect the British pound to start coming down to the bottom of its well-defined trading lane, which is not too far from where it is now. So support would probably come in about 2100, 2110 area. And still be good. You see, just a beautiful trading lane the pound's been sticking in. And if you've stuck with me this long, you probably guessed there's not a whole lot going on. I'm not really looking to take positions. This this triangle pattern here. Actually, there's a couple possibilities. There's this bearish wedge which is starting to form up. There's just not enough momentum here. You can see it's petered out of the tip. Anywhere you slice it. Not a lot going on. Moving averages have completely flatlined here on the hourly bars. 4-hour bar really isn't providing much guidance. So we've just got to, again, keep our powder dry, wait for the decent setups. Last comment I want to make is from the prior low here. The next level is going to be critical is this 161 area, or the 786 retracement. If the market can hold this level, then more than likely the up move will remain intact. If you do see the market moving past 161 here, I would anticipate a move down here to the 1.272 extension, which would be 95.36 eventually. And again, that move may take some months to come into play. Again, if the U.S. dollar is going to strengthen, then it's just something we've got to watch out for.